Hi, my name is David Heller. I've been a financial advisor for the last 15 years, working with individuals to help them figure out ways to build their wealth, but also ways to protect it. And in today's video, we're starting a three-part series on life insurance planning. In this first video, we'll focus on what we believe is the most important part of the life insurance planning process, which is how much life insurance should you have and helping figure that out. Once we determine that, we'll move on to the second and the third step, which is figuring out what's the right type of insurance product to have in place. Is it term? Is it permanent, whole life, variable, index universal life, things like that. Now, let's fast forward and assume that we've gotten to the point of the conversation with a client where we've gotten to the point where they're like, yeah, you know what, David, I agree with you. I think we do need some life insurance. So then the question becomes, well, how much insurance do I need? What's interesting is that in most conversations, we usually see clients jumping right to the product side initially, where they're kind of asking, okay, well, I've heard about whole life and permanent insurance and cash value, or, how much does term insurance cost and things like that. And that's all important. But that's actually the last thing that we look at, because when someone decides to put life insurance in place, it's not because of cash value and dividends and tax-free withdrawals. I mean, those are all great features to, say, permanent insurance. But for this conversation, what we're talking about is really about how much life insurance should we have in place? Because as planners, our main goal is to make sure that our client is protected. So what that means is if something were to happen to you, that your family and your loved ones, they're protected and they're not basically backed into a corner where they're forced to make financial decisions and even lifestyle decisions that maybe you wouldn't want to have happen, or you wouldn't want to put them in the position to have to make. So going back to what I was mentioning before in terms of how do we figure out how much insurance you should have, when people are trying to benchmark how much they need, we tend to hear a couple of different things. Sometimes people will randomly pick a number that they feel sounds like enough. Sometimes people will base their coverage off of how much it costs. And, that's certainly a factor. However, it might not be necessarily the most efficient way to do it. All of these things, they're not bad. I mean, listen, it's better to have something in place versus not having anything. But when it comes to your true insurable need, we think a specific approach for your unique situation really makes the most sense. And when we say a specific approach, what we mean by that is looking at a couple of different factors that we want you to consider when trying to figure out the right number. The first factor is, well, how much do you spend? And notice how we say spend, not how much do you earn. Because what we really care about is if you no longer were here to be able to provide for the well-being of your family and your loved ones, you want to make sure that the income that you generate that is going out in consumption can be replaced. So then the thing you want to figure out is, well, how much does my family spend if I were no longer here to generate that income to be able to produce that kind of lifestyle that they're currently living? So go through all of your current living expenses. And what we mean by that is, cable, cell phone, electric, all of those types of things. And it can't kind of educational goals. Maybe it's being able to pay off the mortgage and not being forced to move out of your primary home. These are all dollar amounts that you want to add up to determine how much life insurance you need. Another consideration is, well, how old are you? So think about it like this. If you're a younger person and you just haven't had enough time to build up your assets, and if you passed away prematurely, you might actually not have enough assets to cover 10 years worth of expenses, or 20 years, or even 30 years worth of expenses. So 10 times income is probably not going to cut it if you look at it from that perspective. So we would say you want to factor in, well, how far are you away from retirement, and what are the resources that you would really need to be able to sustain the ability to get to retirement? And then here's another thing, like what are some of the obligations that you feel you want to be able to provide if you're no longer around, right? Like educational expenses. Maybe it's debts that you want to pay off. Maybe it's being able to make sure that your family doesn't have to, they're not forced to moving out of your house, or setting up a GoFundMe account, or things like that. Now, everything that I just went through makes this probably sound like insurance salespeople because everything that I went through basically increases how much insurance you'll need. But now that we've got that out of the way, let's talk about things that actually can bring down your need for life insurance. So the first thing that we want to consider and address is how much life insurance do you currently have? I've come across this situation where someone was in their early, mid, or late 20s and they bought a policy at some point or bought multiple policies throughout the years. So we want to take into account what they already have and determine structure of those policies or how long they're actually going to last. In most situations, you probably work for an employer where they're giving you some life insurance protection, which is provided through a benefits package. Maybe it's $50,000. Maybe it's a multiple of your total income. Maybe you have the ability to buy up additional coverage on top of what they already give you. It is something that you want to factor into the overall equation. The other thing that you want to consider is your current assets. That could also satisfy part of the overall need of what you would want to have in place. And as our pot gets bigger and bigger in terms of assets, the insurable need actually will come down. So you want to factor in whatever brokerage accounts you have. Maybe it's old 401ks, current 401ks, could be any sort of IRAs, anything that basically you would consider to be an asset. So one thing I do want to add that I think is very important to mention, which I think will tie everything in here, is that life insurance planning isn't necessarily a one-time event. I think there's like a big misnomer out there, and I do hear this periodically from people, is that, oh yeah, I took care of life insurance, 10 years ago. I do think it's a good practice to at least revisit it every, I don't know, maybe like 3 to 5 years, just to make sure that the amounts are right, that the actual structure of the product is right, and that you understand what the durations of the protection are going to be. Because let's face it, over time and over the course of your life, things are going to change. What's happening to you maybe at 30 versus 40 versus 50 versus 60, it's going to be different, and you're going to witness a lot of different things that happen to other people or loved ones. Your priorities might shift in terms of who you want to make sure is protected and not possibly put in a bad situation if you weren't around anymore. I think the most common one is that people will end up, especially earlier on, like maybe when they're late 20s, early 30s, when they start getting into the situation where, maybe they get married and they either buy a house or they have a kid, right? Like, so when you're doing that kind of planning, it's really important to focus on, well, what do I want to have for insurance right now? But you just never really know. So just understand that at some point in time, it's never a bad idea to actually layer on and, basically ladder your life insurance and do a reevaluation, because like I said, you might buy that house or have that kid or vice versa. And then 3 years later, you have another kid and maybe you buy another property and maybe your income has gone up. So things are going to change and they're going to ebb and flow throughout your life. So it's important to just reevaluate it and make sure you have the right protections in place. So to wrap everything up, it's always more fun to talk about investments and asset allocation and tax efficiency and retirement planning. But I would say that insurance planning and estate planning, things like that, it's still super important to consider and even stay on top of. And it's exactly the kind of stuff that any good financial advisor is going to really do for you and make sure that they're on top of and that you don't fall by the wayside in terms of looking at these things and sort of updating them periodically. And so with all that being said, I hope this video was helpful. If you have any questions, please feel free to reach out to us at our website, like and subscribe for more upcoming content, and I'll see you in the next one. If you're ready to take your financial planning to the next level with a customized approach, feel free to reach out to us. This way we can help determine if we can even help you or even point you in the right direction. The best way to reach out to us is through our website at sandersmith.com. Thanks for watching. For more valuable tips on financial planning, check out those videos here. And if you found this information helpful, please like and subscribe so you don't miss any future content.